really thought about what goes into getting a mortgage? I mean, beyond just signing papers, it often sounds like, well, just mountains of paperwork, right? Endless forms, and it feels like you wait forever. But what if there was a way to get a real handle on how that entire world is being, frankly, turned upside down? Today, we're doing a deep dive into something pretty transformative: how artificial intelligence, AI, is just completely revolutionizing mortgage processing. Our mission here is to cut through the buzzwords, really unpack what's changing, and show you exactly how AI makes things faster, smarter, and what that really means for the people working right in the thick of it.
Absolutely. And, a lot of our insights today come from a really fantastic resource, Mortgage Processing with AI, a modern guide for loan professionals by Claudia Reid. She does a great job laying out not just what these AI tools are, but crucially, why they're so important and how they're reshaping, well, pretty much every single step of getting a mortgage. This should give you a really clear picture of an industry that's evolving incredibly fast.
Okay, so let's set the stage first. Before we even get deep into AI, maybe quickly remind us of the old way, the traditional mortgage process. There were those main steps, right? Loan origination, processing itself.
Underwriting, closing, and then, post-closing and quality control. 5 key stages.
And historically, each one was super labor intensive and always against the clock.
Exactly, super time sensitive. And what's so fascinating now is how AI just fundamentally changes that whole workflow. It's really not just hype, it's actively replacing what we call those long paper-heavy loan cycles, tedious manual verification, and compliance bottlenecks. It swaps them out for smart automated systems. It's more than just efficiency, though. It's almost like it changes the basis of trust in the process, moving from manual checks to algorithmic verification.
That contrast sounds pretty stark. So, like, traditionally, you'd be manually chasing down documents, physically checking W-2s, pay stubs, lots of waiting.
Right. Days, sometimes weeks of back and forth. Now, with AI, you're talking optical character recognition, OCR, scanning docs, pulling out the data automatically. It can verify income almost in real time, flag weird things, flag missing documents, sometimes before a human even looks at it.
Okay, so if you're a processor who's maybe been in the game for years, doing it the old way, what's the immediate, day one difference they feel using these tools?
I think the biggest thing is that shift from chasing information to managing information that's already being gathered and flagged by the system. Instead of manually requesting everything, the AI is often pulling it directly or instantly scanning what the borrower uploads. It flags the problems for you. It really shifts the burden.
That is a huge shift. But, okay, with all this automation, it makes you wonder, what skills are still absolutely essential for a processor? Do the basics still matter as much?
Oh, absolutely. Crucial. Claudia Reid really hammers this point home. Mastering the fundamentals, non-negotiable. Things like understanding debt to income, DTI, loan to value, LTV ratios, knowing how to read credit scores, understanding the different loan types, conventional, FHA, VA, USDA, knowing your way around title and appraisal reviews, post-closing QC, and of course the regulations, TRID, ECOA, QM rules, RUS-PA. You still need that deep knowledge. AI helps apply the rules faster, but you need to understand why.
Right, the AI doesn't replace the judgment, it just speeds up the mechanics.
Exactly. It handles the tedious stuff, freeing you up for the critical thinking.
Okay, that makes sense. So we've got the why and the what's. Let's walk through the actual mortgage journey now, step by step, and see where these tools fit in. What are these platforms that are powering each stage, starting right at the beginning with the application and getting all those documents in?
Yeah, the application itself used to be a real pain point, didn't it? So a platform like Blend is a great example here. It's a digital lending platform, automates a lot of that initial loan origination. Think of it like a really smart application. AI helps autofill fields, pulling data from other secure sources in real time. Cuts down massively on manual typing.
And it does more than just fill in blanks, I assume. What's the strategic edge there?
Definitely. Blend connects the dots. It doesn't just autofill. It automates collecting documents too. It can link directly to bank accounts using things like Plaid or payroll providers, maybe Argyle or Truework. Its OCR reads the documents borrowers do upload, flags problems right away, and basically aims to deliver what they call an underwriting ready file straight into the main system, the LOS. Like Encompass, it just compresses that whole front-end data gathering nightmare.
Okay, so Blend handles the initial application smoothing, but then there's the flood of documents that come after. W-2s, bank statements. Are there specific platforms tackling that challenge?
Yes, absolutely. Look at Roostify. That's another cloud-based platform, but really focus on document recognition. Borrowers upload their stuff, and Roostify's AI Brain uses OCR, natural language processing, NLP, and pattern matching to figure out what each document is automatically. It could pull data even from a, say, slightly blurry W-2 photo and flag if something looks off. It auto tags everything, organizes it. Huge help in reducing that, where's that document? Chaos.
So it's not just faster, it's actually making the processor's workflow cleaner, more organized.
Precisely. And Roostify has this processor dashboard. Think of it like their mission control. Shows you verification statuses in real time, highlights flagged issues, tracks what the borrower is doing. It lets you be proactive, not just reacting to problems.
And what about people working remotely or borrowers who just live on their phones? Are there mobile solutions?
Yep, that's where something like Simple Nexus comes in. They build themselves as a mobile-first POS point-of-sale platform.
Yeah.
It basically puts your whole loan pipeline, your processing desk, even your document scanner, right into an app on your phone.
Wow, that sounds incredibly useful. Can you give us a quick, real-world example of how that mobile aspect makes a difference?
Sure. Imagine a borrower snaps a photo of their W-2 with their phone on, say a Saturday night. Simple Nexus uses its AI and OCR right then and there. It reads the data, labels the file W-2, maybe flags it if the photo's too blurry. Then, come Monday morning, you, the processor, get an alert. It's already labeled and waiting. And importantly, the borrower sees a little green check mark on their app. Income verified. Think of all the "hey, did you get my document" emails that avoids. Plus, you have instant visibility.
That leads perfectly into the next big-time sink historically, actually verifying income and employment. You mentioned chasing HR departments for faxes. Feels like that's going away.
It really is changing dramatically. Platforms like TrueWork are designed specifically for this. TrueWork connects directly, with borrower permission of course, to thousands of employers and payroll systems. You send the request electronically and bam, you get back verified employment status, salary, income history. It's even approved for Fannie Mae's Day One Certainty Program, which is a big deal. Adds a layer of confidence.
Okay, and you mentioned Argyle earlier. It's sometimes called the real-time spy for income data.
Yeah, Argyle's approach is interesting. It's a direct pipeline into payroll systems. Think of it like Plaid, but for paychecks instead of bank accounts. It pulls verified, real-time data straight from providers like ADP, Gusto, you name it. This is super valuable for, say, gig economy workers or people with multiple jobs, where getting a traditional VOE can be tricky.
And Pinwheel, where does that fit in the income verification puzzle?
Pinwheel, sometimes called the payroll architect, goes maybe a step further. It offers more advanced analytics on top of the verification, looking for fraud indicators, income trends, that sort of thing. But the bottom line for you as a processor, the speed is incredible. You send a secure link to the borrower. Maybe by lunchtime you've got verified VOE, year-to-date income. You can plug that straight into an automated underwriting system, maybe get that approve eligible result almost instantly. You could be prepping for closing by Tuesday. It's not just faster, it really cuts down on fraud risk and potentially opens up lending to people who were harder to verify before.
Okay, so income's verified faster. Now let's talk about the decision engines themselves. The automated underwriting systems, AUS, Fannie Mae's desktop underwriter, DU, is kind of the giant here, isn't it?
It really is. Think of DU as like the established senior advisor for conventional loans, but also FHA and VA loans. It uses AI, tons of data analytics, and complex rule sets to assess the loan's eligibility and risk level. It spits out one of those key findings: approve eligible, refer eligible, or maybe ineligible. Gives you a fast, consistent read.
And its counterpart, Freddie Mac's Loan Product Advisor, LPA, how does that differ?
LPA is often seen as the other major player, also in AUS, but it's specifically optimized for loans that are going to be sold to Freddie Mac. It leans heavily on machine learning. Generally, DU has broader support for FHA, while LPA might be seen as a bit more flexible on things like rental income or complex income layering. Lenders often run files through both, depending on the loan product and where it might end up.
And then you have systems like Encompass by IC, you're called the Master Command Center. How does that integrate these AUS tools?
That's a good way to put it. Encompass is a full loan origination system, an LOS. It acts as the central hub. It integrates both DU and LPA directly into the workflow. It also uses its own AI to help pre-fill data going into DU or LPA, flag missing info needed for the submission, and keep an eye on compliance rules throughout the process. The big picture benefit here: these AUS systems take underwriting time down from potentially days to literally minutes. They instantly flag potential issues like a high DTI and ensure the loan meets the specific agency guidelines up front. This is absolutely critical for getting those automated approvals and for packaging clean, sellable loans for the secondary market, which drives a lot of the economics in mortgages.
Makes sense. Okay, shifting gears from the borrower's data to the property itself, valuations. Getting an accurate property value quickly seems like another area ripe for AI, right? Instead of waiting days for an appraisal.
Exactly. AI is making huge strides here, using machine learning, geospatial data, analyzing millions and millions of property records. Platforms like House Canary are prime examples. They call themselves the smart oracle of real estate values. It's an AI platform delivering real-time home values, market trend analysis, apparently crunching over 1,000 data points for each property. Lenders can sometimes use these AI valuations, these AVMs, instead of a full traditional appraisal, especially for things like home equity lines or certain refinances where speed is key.
And collateral analytics, what's their niche?
Collateral analytics, maybe the algorithmic appraiser, focuses on providing those fast automated valuation models, AVMs. Banks, investors use these for quick checks, portfolio reviews, often needing regulatory compliant reports. They might analyze, say, the top 30 comparable sales automatically. Speed and data consistency are key.
Then there's Clear Capital, taking more of a hybrid approach.
Right, Clear Capital is kind of the hybrid appraisal king. They cleverly blend AI tools with human appraisers. They offer different options. Fully automated, hybrid where AI does the initial heavy lifting, desktop appraisals, or still the traditional full appraisal. The AI might do the first pass scanning MLS data, tax records, maybe even analyzing drone photos, flagging potential issues. Then a licensed human appraiser reviews the AI's findings and adds their expertise. Best of both worlds, potentially.
And here's a really practical tip you mentioned earlier, relevant for processors listening. If you're stuck waiting on a full appraisal but need a value now to clear a condition.
Yeah, this is where House Canary or similar tools can be clutch. You run the address through the system. In minutes, you can get a value estimate, see the strongest local comps it used, even get a risk score for that valuation. It might be just enough to help you push that file forward and get an approve eligible, maybe even by lunchtime, instead of waiting days. It's about unblocking the process.
Okay, final hurdle, closing the loan. This used to be another paper-intensive, sometimes chaotic stage. How's AI changing the closing table?
It's making a big difference. SnapDocs is a major player transforming this stage. It's an AI-powered platform that starts with automating document assembly for the closing package. Its AI can identify, tag, and correctly label every single document, even if they come in as just one big, messy PDF file. It ensures all the required docs for that specific loan type are actually present. No more last-minute panic searching for a missing form.
And for the borrower actually signing everything, is the e-signing experience smarter too?
Very much so. SnapDocs uses what they call a smart e-signing workflow. It guides the borrower step by step through the digital documents. Crucially, if they miss a signature spot or an initial field, the system flags it immediately, right then and there. This prevents those painful funding delays that happen because someone forgot to initial page 19 of 150. It also uses AI behind the scenes to automate scheduling the closing, coordinating with notaries, finding the best available notary based on location, their rating, their availability. It smooths out the logistics.
That real-time transparency dashboard you mentioned sounds incredibly helpful for keeping track of everything.
It's huge for processors. It lets them see exactly what's been signed, what's still outstanding, track the borrower's progress live. Plus, it creates a full, detailed audit trail for compliance. Think about that real-world scenario again. Borrower's closing late on a Friday, 4:30 UPM. SnapDocs sends the e-package, finds and assigns the notary, tracks the e-signatures live. It flags any missed spots instantly for the borrower to fix. The result: a complete, clean, error-free closing package delivered digitally. That loan can fund smoothly first thing Monday morning, no weekend stress, no delays.
It's pretty clear how all these tools move together. You mentioned Claudia Reid's example of Alana, an AI-powered processor. She uses Blend for apps, TrueWork for income, DU for underwriting, SnapDocs for closing, and her pipeline doubled with fewer mistakes.
Exactly. And what's really key there is how her role changed. While the AI took over the repetitive data entry type tasks, Alana's job became more strategic, less clerical work, more oversight, and problem solving. Does mean, though, that processors need to develop some new skills. Tech skills are becoming more important. Things like being comfortable with Excel, maybe some basic SQL knowledge, understanding APIs and how systems talk to each other.
Okay, wait a minute. Basic SQL knowledge or API familiarity for a mortgage processor, that sounds pretty technical. Why would they need that, practically speaking?
That's a fair question. It's not about becoming a software developer. Basic SQL, for example, is really about understanding how to query the massive amounts of data these AI systems generate.
Yeah.
How do you ask the right questions to get useful insights from the system? And understanding API's application programming interfaces is about knowing how these different tools, Blend, TrueWork, and Compass, SnapDocs, actually connect and share data seamlessly. You're not just pushing paper anymore. You're kind of orchestrating a complex digital workflow. Understanding how the pieces fit together is becoming really valuable. It's about managing the system, not just the files.
Got it. So managing the tech, not just the tasks. Which brings us to the elephant in the room. With all this powerful automation, is AI going to make mortgage professionals obsolete? What's Reid's take on this?
She tackles that head on. And her message is really clear, and I think quite empowering. She says basically, AI won't replace mortgage professionals, but those who use AI will replace those who don't. It's not about elimination, it's about evolution. She talks about being repositioned as a queen of automation, efficiency, and futuristic excellence. It's about leveraging the tools to elevate your role.
Okay, but AI isn't magic. It can't be perfect. There must be downsides, challenges, areas where human oversight is still absolutely critical.
Oh, absolutely, big ones. Data privacy and security, for instance. You're centralizing huge amounts of incredibly sensitive financial data. That requires extremely robust security measures and constant human vigilance. One breach is catastrophic. Then there's the whole issue of algorithmic bias. This is a major concern in lending. If the historical data used to train an AI reflects past discriminatory lending patterns, even unintentionally, the AI could learn and perpetuate those biases. That means humans must be involved to ensure fairness, to audit the AI's decisions and make sure everyone gets equitable treatment, and just over-reliance on automation. What happens if the system goes down, or if there's a glitch in the algorithm affecting thousands of loans? You need human judgment for exceptions, complex cases, and contingency planning.
Right, so the human touch, the critical thinking really comes to the forefront in those complex areas, especially things like compliance and ensuring fairness.
Precisely. And AI tools can actually be powerful allies in compliance when used correctly. Take TrueID, for example, with all its complex rules about disclosures and timing and cost tolerances. AI can automate those checks, enforce the timelines, flag potential violations instantly. It takes a huge compliance burden off the processor. Or qualified mortgage QM rules. AI can automatically check that the debt-to-income ratio is within limits, usually 43%, verify the income properly, ensure there are no risky loan features. This helps lenders achieve that legal safe harbor, which is really important. And for fair lending laws, ECOA, the Fair Housing Act, HMDA AI can be used to analyze lending patterns, help ensure decisions are consistent and unbiased, and accurately report data to regulators looking for discrimination. By doing things like helping anonymize data during initial reviews or flagging applications that might pose a higher risk of unintentional bias for closer human scrutiny, AI can actually support fairness goals. So those core processor principles, verification, risk assessment, consistency, fairness, decision making, they aren't gone. They're amplified. AI provides better tools to uphold them.
So, pulling this all together, what's the main takeaway for you listening, trying to navigate this rapidly changing landscape?
I think the essence is this. The mortgage industry has fundamentally shifted. It's gone from being this slow, paper-choked process to a much smarter, faster, more efficient system powered by data and AI. But critically, AI isn't diminishing the human role. If anything, it's amplifying it, making it more important, but different.
Yeah, it seems like it frees professionals from the repetitive grind, lets you focus on the stuff AI can't do, the nuanced judgment calls, solving complex borrower problems, building relationships, handling exceptions. You're not just processing files anymore, you're becoming, as Reid puts it, a royal architect, someone who understands and manages this whole modern digital lending machine.
Exactly. So maybe here's a final thought to leave you with, something to chew on. In this world that's getting more automated by the day, how will you personally leverage these incredibly powerful AI tools, not just to do your current job faster, but to actually redefine your own value, your expertise? How can you use this shift to carve out a path towards more innovative, more impactful work within this new lending reality?